Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. It's a TGIF, folks, and it's a long weekend, so let's make it a great one. Let's take a look at one of our 4 agreements. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We had the Dow Industrials up 8, NASDAQ down 6, S&P's off a couple, 2.5. Gold contract down at $26, trading at $1,609 an ounce. Now, what gold did, folks, is this. Gold had been building cause to go after its January 4th high-volume swing low, and bottom line, it built that cause, and the cause was for downtown, blew that away today, and as a Friday in the gold market, folks, is always dangerous. We were talking about it all week, coming into that swing low, was getting plenty of sleep. It woke up in the morning, took the swing low out, and took it out, folks, at 242,000 contracts. Now, what that sets up a 1569 ABC structure on the way down. It's a confirmed ABC. Blew the B point away, blew it away with monster volume also. And in that context, so did in the HUI, so did in the XAU, so did in the GLD. All of the above. Gold going a lot lower. Platinum. Silver, rather, down 57 cents at $29.77. Platinum off 29 bucks at $1,680 an ounce. Copper was flat at $3.73 a pound. Light sweet crude. Now, light sweet crude backed off that high up there. She came down $1.35. We're at 95.96. 30-year bond, that was flat, down 5 ticks. Actually, flat market though at 143.10. King dollar. Now, King dollar, folks, has two, well, it just finished one ABC structure on the way up. It has a larger ABC structure on the way up that it had taken out the B point. It took that B point out with volume, a huge volume, by the way. That was yesterday, and what we have is this. King dollar right now is trading out at 80.50. King dollar first price projection is up here at the 81.60 level. Now, the key flat out, and you know, the gold market has been screaming that King dollar is going to perform out here because King dollar really, you know, has been just moving sideways for almost 5 months as gold has continued lower price. Well, what you have with King dollar is this. The 81.5, I suspect, is going to get blown away. Why? Because the actual swing up here is 84.24. That's the way, that's the swing point that was out there from January. I suspect we're going after that swing point. Now, intraday out here today, it was pretty interesting, and this is what it was intraday. If you were watching the market took a nice little hit intraday, and this is what it did. And what that was all about is Walmart. You know, we've been watching Walmart like a hawk. The reason being is that Walmart had consolidated for 13 years. It had taken its swing point out, and it took that swing point out 3 months ago. Then it came right back inside the lower range. First month. Then went back outside it again. Today, got devastated. Walmart today, it's only down $1.52, trading out at $69.30. Volume exploded out of the stock, folks. You're talking about 25 million shares. Now, intraday, this is what ended up happening, folks, is that intraday, the Walmart executives, and this is, you talk about shooting yourself in the foot. Walmart had the worst sales start in a month in 7 years as payroll tax increases hit shoppers already battling a slow economy, according to internal emails obtained by Bloomberg News. What had happened is that Bloomberg News intraday, actually at 16 minutes past 2 Eastern Standard Time, got hold of these emails, and this is a quote inside the email. In case you haven't seen a sales report these days, February sales are a total disaster. Jerry Murray, Walmart's Vice President of Finance and Logistics, said in a February 12th email to other executives, referring to the month-to-date sales. This is the worst start to a month I have seen in my 7 years with the company. Bottom line, it hit it, and it hit it good. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, flat market. You're down $2, but it's a flat market. Now, what is intriguing here, because we did have option expiration out here today, you did 871 million shares versus the 671. We put this on a weekly basis, you know, so it's the end of the week. What we do have is this, is that the close of last week was at 1518.11. Well, you're 1519.08. What does that mean? That means that, hey, that high out here today can get tested. We go to the Dow Industrials. We take a look at the Dow Industrials. What we have with the Dow, she ended up being up $8. Dow Industrials, that didn't get her over the highs. We're at 13,974. That's on the daily. We put this on the weekly. What you're going to see on the weekly is this. This is the third week we've been up at these levels. We hit 14,000 and closed at 14,009 the first week of February. Second week of February, we hit 14,022. We closed at 13,992. This week, we hit even a higher high, and we closed under both of those. You know, so bottom line is that is saying, yes, it's going to pull back. The real question is going to be how we pull back. Do we pull back with any volume? NASDAQ composite. Let's go over to the composite. We take a look at the composite. What we have with the composite is this. Composite, flat market, down $6, but realistically a flat market. We're at 31.92. Composite did 1.8 billion versus 1.9. We go look at this, and we put this on a weekly basis, and what we have with the composite is this. The composite has been testing the week of, well, on the daily, it was testing the September 21st level. On the weekly, it's testing the week of September 21st. That number, folks, is 31.96. And we hit 32.06, and we closed underneath it. That is also saying, inside the composite, that the composite is a failure. It gets over it with price, gets over it with volume, closes underneath it on the daily and on the weekly. The daily, folks, had 2.5 billion, and as we were going up to that price point, we were hitting that price point with 1.8, 1.9 billion. Okay, let's go to the gold market. So, gold, these high volume lows, folks, you got to be really careful of them because they want to get tested. They do get tested, and if they get any rest before they come to get tested, what ends up happening is that they can take them out. And that's exactly what we had inside the gold market. So, the gold contract, this is how it's straightened out. The high volume low that we had in this contract was 1627.90. That was generated on the 4th of January. We did a bounce out of there, got from 1627 all the way up to 1699.90. Just missed the 1700. Bottom line, come all the way back down. Your first inclination that, hey, there's going to be trouble in paradise came on the 11th of February. 11th of February, volume expanded tremendously as we got into the swing point, as we got into the smaller swing points from January 2nd, 20th rather, took it out with volume. This morning, yesterday we closed right before the swing point, and you don't want to see that. And we had an expansion of volume. Yesterday, we had an expansion of volume to 174,000 contracts. Bottom line, gets up today, blows it away. This is a very large ABC structure on the way down. And what you want to remember, folks, is this, is that an ABC structure on the way up or the way down can either do a 1-to-1, meaning if you go down 10 points, A to B, then C to D can be 10 points. Or it can do a 1.382, which you get down 10 points, then the next leg you get down 13. Or a 1.50, first leg's 10, next point's 15, or a 1-to-1.618. First leg will be 10, next one will be 16. If you do a 1-to-1.618, that's an immediate change of trend in the marketplace. You know, anything that and over is immediate change of trend. Bottom line, this structure here is set up, first price point is at 1569. Now, I'm going to bring up a continuous contract because I want to show you what you have here. And what happens with a continuous contract, folks, is this, is that you're just tying contracts together, and that's important. The reason it's important in the context of how and where this would like to trade to. So the gold market has been trading sideways since July of 2011. So we're dealing with, 1.7 years. The last swing low out here was 1523. The ABC structure to 1-to-1 is 1569. We're going to go for that. And this market's just deviant enough that we're not only going to go for that. What this does open up is that once you get into the... Yeah, you stay right there because I'm going to show you something that's pretty unique. This is Tom O'Brien, it's the TFNN. We're going to come right back, folks.